Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh and we've had a whole host of queries come in and we're going to take them up with our experts. But first up, a quick look at the markets. There has been around a 25-point recovery that we have seen on the index. We did briefly move into the green just a few minutes ago as well. And now we're trading just below that 18,200 mark. So let's see how the market moves from here. But for now, we're absolutely at the flat line. The Nifty Bank is also picking up. It's seeing gains of around 200 points with, of course, the PSU banks doing a bunch of the heavy lifting. That index is up, almost 2.5% right now. That is the kind of move that we've seen on the PSU banks. Sorry, 3.5% on the PSU banks. But let's get to all of our queries right now. We have Kush Bohra as well as Vijay Chopra of EnochVentures.com to answer all of your stock-related queries. Kush as well as Vijay, thanks a lot for joining us. We've got a lot of queries to get to, so let me just start. Mehak Jain is the first one. She's written into us from Ooty and she says she has 150 shares of SBI. She bought these at 300 rupees and 100 shares of PNB at 20. So clearly she's making good money in both of these. Another positive is that she's a long-term investor and she wants to know whether to remain invested in these stocks or whether she should get out, considering that she's already made good money on these. Vijay, since she's a long-term investor, I want to come to you first on this. Banks have been a favorite across the board. Do you think these are good picks within the banking space?
I think SBI is one of the best, but looking at the current situation and the kind of run-up this stock has shown, I would say that booking profit is a good idea. And if at all you get the stock again in a correction around 550 odd, it would be a great entry point for SBI. So I would recommend an exit booking profit. As far as PNB is concerned, I think that the run-up has just started. There's a huge valuation mismatch, and I think that this stock has a potential of going up to maybe even 60. So just keep on holding this stock. I think with the market capitalization of close to 50,000 crores, there's a huge valuation mismatch, and the results have been good. The recovery has been good, and the NPAs have been consistently coming down. So I think that PNB has a much higher potential of running up. So for a target of 60, you can keep on holding. SBI book profits.
All right, book profits in SBI, and PNB has significant room left for an upside. By the way, remember PNB just in 1 month has already seen around a 25% run. But we're just saying that, there's room for lots more to go here. Let me also bring Kush in. Kush, I'm sure both of these charts have been interesting to track, and a lot of the other banks as well, right? So take us through what you're making on both of these, and just on a technical basis, how is it looking?
Sure. The reason for the big grin is that, this might probably just confuse the investor a little because my views are slightly different, which is, SBI has just begun its rally. I would say hold on to SBI. I mean, if you're looking at the PSU space, the only three stocks that you should ideally look at is SBI, Bank of Baroda and Canara Bank. So I would suggest hold on to SBI, especially given that she is a long-term investor. PNB, I do see a lot of upside, but the kind of sharp move we've seen, it's not a bad idea to take some money off the table, even if you're an investor. So I would suggest, like a partial book profit, maybe even like a 50% quantity that she's holding. She could book partial profits on PNB, whereas SBI, she could continue to hold on. The stock could see much higher levels of 675 and 700 also in the coming weeks and months.
Okay, so between both of you, you've said to hold one and exit the other. But, that is a complete fundamental as well as technical perspective on SBI as well as PNB. So I hope that helps our viewer who's written in. The next query comes in from K. Sambaseva Rao, who writes to us from Guntur, Andhra Pradesh, with a query. He's actually, he has investments in TVS Motor as well as Trident and is on the line with us. Mr. Rao, if you can hear us, please go ahead and ask your question. Yes, please ask us your question. Yes.
Madam, I brought that TVS Motors at the rate of 650. I'm the Trident at the rate of 35. But I am a long-term investor. Can I hold that 2 shares up to 2 to 3 years?
Okay, let's ask both of our guests that question. Kush, let me come across to you first. TVS Motor, he's obviously got in at a good price. I mean, the stock is pretty much doubled from where he bought it. It's currently at an all-time high. How do you look at this one first? Let's tackle TVS and then we'll get to Trident.
Sure. See, first up, congratulations on buying great stock and holding on to this one for such a long time. Not giving into the temptation of selling while the stock was up. Here too, I would suggest it'll not be a bad idea to book about 25% profit on his holdings. Take some money off the table, take your capital out of the investment. So that's the idea. Otherwise, the stock looks fairly, in a very, very strong uptrend. We're seeing a sideways consolidation for the last 10-15 sessions, but that's just a breather after a very long and a very sharp up run. I wouldn't rule out a move to 1250 and 1275 levels in the coming weeks on this stock. As I said, take about 25% capital home, and the rest he could very well stay invested.
Okay, that is on TVS Motor. Also on Trident, how would you look at it? Because, for the year, of course, the stock is it's not done much. It's actually down around 30% for the year. But the past 5 days or so, it's seen quite a move, right? It's up around 10%.
Yeah, in fact, one other congratulations in order is because the price at which he's bought, that's practically the bottom, that the stock has made, just a little under that, but the price is fantastic. Now, as you said, the stock has actually been in a bit of a downtrend, but the price at which he got in is fabulous. That's, as I said, the base, that the stock is formed at. My suggestion here would be keep a trailing stop loss of your buying price in case the stock, in case this turns out to be a false breakout and the stock turns, you'd at the very least get out at your cost price. So keep a trailing stop loss of 35, the price at which he bought it. In case this, does turn out to be a strong rally, which the data is suggesting, the stock could move to 45 levels where the 200 DMA stands. So stay invested, but with a tight stop loss of 35, which is his buying price anyway.
Okay, got that. I also want to ask Vijay on both of these stocks. Vijay, he is a long-term investor. He's saying he's okay to hold for 2-3 years. So that is not an issue. But take us through your call on both TVS and Trident with this kind of time frame in mind.
So first I'm going to comment on TVS. I think that he has seen a decent run up. So I would say that booking profit won't be a bad idea. Get into a story which has not moved. So I think that Hero MotoCorp selling TVS and getting into a Hero MotoCorp in the same sector won't be a bad idea. So you can flip it. And I think that, if somebody is holding with a 2-3 year perspective, there is money to be made in Hero MotoCorp also. It is one of the largest players in the two-wheeler, in the EV two-wheeler industry. And I think there are lots and lots of action is going to be there in the next few years as far as the EV space is concerned. And definitely Hero Electric is coming up and playing the right shots. So exit is the call on TVS and get into a Hero MotoCorp. Other is Trident. I think that the stock has consolidated really nicely, and the entry point of this gentleman is fantastic. I would strongly recommend to hold this stock. I see it coming to maybe 50, and then the next target would be 55 and 60. So keep on holding if you're a long-term investor. Trident, even on the balance sheet, the company looks very good, fundamentally strong. The technicals are also good. The stock has consolidated. The charts are fairly good. So I think that, keep a stop loss of around 33, 34. That would be good in case of any mishap. Otherwise, Trident looks fantastic on charts and fundamentally also.
All right, Mr. Rao, I hope that helps you. We had both of our guests answer your questions. So I think everyone is saying that on TVS, because you've already seen such a big run up and perhaps a lot of it is already in the price now, you could book some profits, at least partial profits in TVS. But Trident, you've gotten at a very, very attractive price of 35. So please continue to hold on to that one with a long-term perspective. With that, let's get on to our next query. This one comes in from Gitika Rastogi. She writes to us from Mumbai and says she holds 20 shares of Cipla, which she bought at 900. She says that she's a medium-term investor and wants to know whether she should accumulate more of this stock or not. Vijay, coming to you on this one, how would you look at Cipla? It's currently, of course, she's sitting with good gains on this stock. It's at around 1130, so that one is looking very good. How would you look at it?
Well, I think that two pharma companies, Cipla and Sun Pharma, they have shown a great run-up while the other pharma companies were not moving at all. I think that there are other opportunities now. So one strategy could be that you book profits in Cipla here and, get into a stock like Lupin, which is again a pharma large cap. So I think that Lupin is a great company, or a Dr. Reddy's, and you can flip the company by remaining in the same sector. So I think that, pharma should do well with a 1 to 2 year perspective and look at companies which haven't moved much. So Lupin is showing an uptrend, and I think that in the next couple of years it should do very well. I won't be surprised that the stock goes to even 1,000 rupees. So Lupin is a strong buy, followed by Dr. Reddy's.
All right, so maybe she could get out of these and look at a few of the other pharma large caps, like you mentioned, Lupin or Dr. Reddy's. Kush, how are you looking at Cipla? The stock has done well, like Vijay was saying, at a time when a lot of the other pharma companies have really not held up. This stock has done well. It's up over 20% this year. Do you think it's best to get out considering that she's made good money?
Yeah, well, I'll agree with Vijay on this one. The stock's actually done quite phenomenal. In fact, both the names that he mentioned, Sun Pharma and Cipla, are the two that actually took the pharma index, to the highs it is at currently. They're seeing a bit of consolidation right now, but if she's a trader, it's not a bad idea at all to take some profit home. However, here also I would advise a trailing stop loss, which is at about 1100, where the stock has taken support. If the stock does break it, then you're better off getting out of it. If this turns out to be just a pause and the stock moves higher, then it could very well take out 1180 levels that that it recently touched the highs of. So I would suggest hold, but with a trailing stop loss of 1100, she'd still be making a neat 200 rupees on her trade.
Okay, got that. So that is the view coming in on Cipla. The next query is also from the pharma space. So Mukul Kumar writes to us from Amritsar. He says he holds 15 shares of Divi's Labs and he bought it at 3,000 rupees a piece. He again says that he's a medium-term investor and wants to know whether he should hold or sell his investments because Divi's has seen quite a fall as well. Kush, coming to you on this one, we were just talking about stocks which have, not some of the pharma names which have not done so well. The current price for this one is around 32.85. And how would you look at this? Do you think that it's better to sort of get out of Divi's, look at another company, or should he maybe hold on for a little bit longer?
Sure. If you asked me this maybe a couple of days ago, I would have probably said an exit. But now the stock's actually fallen, quite a lot. It's actually coming very close to an oversold territory. The saving grace here is that his buying price is 3,000, and despite the fall, the stock is still above his buying price. Now, as I said, the stock is coming very close to its overselling territory. We would expect some sort of bounce on this stock. The advice here would be fairly similar to what I said a while back, which is hold this one with a trailing stop loss of your buying price. If the stock comes to that, you'd still be exiting at cost price. Since the stock has fallen too much very sharply owing to whatever the numbers have come out, and it's trading very close to its oversold zones, you could expect some sort of a bounce. And if he's an investor, then I don't see a reason for him to exit just yet. Maybe in hindsight it might turn out to be a buying opportunity, but for now, hold with a trailing stop loss of his buying price, which is at 3,000.
All right, hold with the trailing stop loss at 3,000. Vijay, how would you look at Divi's? I mean, the all-time high was above 5,300. How much room do you think is there right now for an upside here?
Well, I think that if the stock turns around, it is completely oversold for sure. And at times we see that quality companies come back very sharply. But again, I would also recommend that looking at the market conditions, we are almost near the all-time high. The stock has not been doing that well. So better to have a stop loss in place. So keep a stop loss of 3,000. I completely agree. And keep on holding the position. There are good chances that the stock might bounce back. And Divi's has a tendency as well as a history of bouncing back sharply and giving very sharp returns.
All right, that is the view on Divi. So you can hold on for now, but do keep a stop loss on the stock. So with that, we're going to get into a short break now. But Vijay as well as Kush, I request you to stay on. We have lots more queries to get to, and I'm going to ask you all of them after just this short break. Welcome back. You're still tuned into Your Stocks. The market has moved back into the green. So we're seeing a gain of just around 5 points, but it is back in the green for now. A lot of this coming through from the banks, which are up 250 points. So that one is definitely looking good, around 0.6% higher on the banks. A few of the other stocks which are, just continuing to rise, the likes of Adani Ports, Adani Entertainment, which have, of course, we've been talking about the kind of run-up that these stocks have seen, but today just contributing further to those gains. Let's get back to our queries, then we'll come back to the markets in just a bit. We still have Kush Bohra and Vijay Chopra with us. And the next query comes in from Yashwant Pangarkar, who calls us from Kalyan with a query. So let's get to him. Mr. Pangarkar, if you can hear me, please go ahead with your query.
Yeah, hello. Hi, good afternoon.
Good afternoon.
I wanted to know about the Godrej consumers.
Okay.
I'm holding about 70 shares with me, and they are bought at an average price of about 900 rupees. Yesterday, the second quarter results are out.
Yes.
And while the top line is good, there is a growth, but profits have not increased, and the share is not performing in line with the other FMCG companies. So should I hold on, or should I add and average it out? What should be the strategy?
Okay.
And my second question is regarding the investment of about 50,000 in IT shares. Whether I am keen to invest in either Persistent System or L&T Infotech.
Okay.
So I need advice on the same. Thank you.
Can I ask how long you're willing to hold these investments?
IT investment, I'll be willing to hold about for a year or so.
And what about Godrej Consumer?
No, I wanted to get out of this because this doesn't seem to be rewarding. They have not given even a dividend also from the FY20 onwards.
Okay, let's ask our guests what they think that you should do. Vijay, let me come to you right now on Godrej Consumer. He bought at 905. It's currently closer to around 810. Like he said, you know, the results came out yesterday. It's not it's weaker than what the street was expecting. Even for the year, the stock is down around 16%. Do you think you should get out?
Well, I have to tell certain things about the company. The company has huge international exposure. Apart from their Indian operations, they do have international exposure as well. And that's the reason why profits are not showing up, because the input cost, the raw material cost has gone up considerably. You know, so they're due to this international exposure and the consumption going down in the Western countries and most of the countries. So this is one reason why we are seeing such a bad performance. Although it's a very good company, it's a well-seasoned company, and if somebody holds for a longer term, I'm sure that, you know, a couple of quarters down the line, FMCG companies should do well. We have seen what happened to Britannia; it was 10% up day before. Godrej can also perform and come back, but still, I would say that since the gentleman is kind of worried, so keep a stop loss of 780, and he can exit at 780. So I would say that, you know, just hold on to the stock. There are good chances that it might come back.
All right, good chances that it might come back. In fact, you know, even the company after its Q2 earnings did say that inflationary pressures are abating. They do expect the margins as well to pick up. So that is what the management is guiding for. Kush, let me ask you on Godrej Consumer as well. How would you look at this stock, and do you think that, you know, he can cut some of his losses?
Yeah, let me give him the comfort of confirmation. I mean, you know, 820 was a very strong support that the stock was holding on to. Today, it's below that. In fact, I know we're seeing quite a bit of selling in the entire FMCG space, barring a few names that have posted good numbers. So I would suggest it's all right. I mean, you know, and plus he looks a little inclined to, you know, book losses, which is actually a good thing. So I would suggest exit from Godrej Consumer Products. It's broken its, you know, key support zones. The stock might, you know, bounce back, but then, you know, we can't be sure if it's a dead cat bounce or is it sustainable. So I would suggest, you know, just for the moment, book profits. When the stock bounces back, we can always re-enter at slightly higher levels. You know, that should not be a problem. For now, exit.
Okay, for now, exit. That is the technical view. Kush, you know, he also asked if this is a good time. He is looking at a few of the IT names, and if he should perhaps get into something like a Persistent Systems, L&T Infotech. Do you think these are good picks?
Oh, absolutely. In fact, if I was given a choice, I would actually pick, you know, the large ones, which is something like an HCL Tech or, you know, an Infosys for that matter. But even the two names that he's mentioned, you know, they are performing fairly well. Although we're seeing a bit of a consolidation, you know, a bit of sideways movement in both of them. Both look fairly well on the charts and ripe for an up move. If I were to pick between Persistent and LTI, I would give perhaps like a 51-49 in the favor of Persistent. But otherwise, you know, both these stocks, you know, look fairly well. And given his time frame of 1 year, there shouldn't be a problem in terms of, you know, the kind of holding period and the upside that both the stocks could see. So, you know, he could either split, you know, his capital in both of them. You know, both the stocks look fairly strong on the charts.
All right, so that is good. Both of these stocks look good. Vijay, can I ask you as well on Persistent Systems as well as L&T Infotech? He clearly wants to get into the IT space. Do you think this is a good way to approach it, or would you recommend looking at some other stocks, maybe some of the larger names as well? Because, I mean, a lot of those have corrected and are available at much more favorable valuations.
Well, amongst all these, I think that my picks would be L&T Technology Services, although LTI is also good. L&T Infotech is also good, but again, LTTS, due to its specific exposure to defense and AI, I think that LTTS has a far more larger canvas for working, and it has you know, overseas operations, especially in Israel. They are an R&D company. So LTTS primarily amongst LTI and LTTS, I like LTTS more. Apart from this, I think that Infosys is also a very good pick if somebody wants to buy with a longer term perspective. There's a buyback in store. So why not go with the behemoths like Infosys and even TCS? So because these companies would be the first to come back. So LTTS followed by Infosys followed by TCS would be my pick.
All right, got that. So I hope that helps our viewer, and that is the view on Godrej Consumer as well as a few of these IT names if you do want to get into to that space as well. The next query coming in is from Jay Krishna, who writes to us from Kerala. He holds 10 shares of Polyplex at 1800. 5 shares of Fine Organics at 7,000 and 200 shares of Zomato as well at 67. He wants to know the prospects of all of these investments and what he should do at this point of time. Vijay, if you can run us through all of these, I know they're starkly different companies, but if you can, try to take us through Polyplex, Fine Organics, and then Zomato.
I was on one of the TV channels this morning, and we were discussing about the new age internet companies, and I think that amongst all those, Zomato is the best placed at these valuations. We actually, there's a disclaimer also, we bought it for our clients when it was around 44, 43, and we really recommend that this stock should be bought into, or if you have already bought, you can buy more. I think that Zomato, if somebody holds with 2 to 3 years perspective, has the potential of doubling up from here. So Zomato is a great pick. Coming to Polyplex, now the problem with Polyplex was that it had a huge European exposure, and due to the energy crisis, they had certain plants there as well. Due to the energy crisis, the cost of production has gone up. Now there's some Thai company which is showing interest in Polyplex. Although I love this company for the dividend yield it gives. So I would say that if you are already invested, keep a stop loss of 1670. Stay invested. It's still a great company. And finally, Fine Organics, I think that this company also is fairly good. It has corrected. So you need patience. Keep a stop loss of 5100 and stay invested. This has the potential of going back to 7,000, 7,200.
All right, so that is the complete view. I think that will come as a sigh of relief to our caller who is who has investments in Polyplex, Fine Organics, as well as Zomato. He can hold on to all of these investments for now. By the way, Polyplex in early 2020 was around 300, and then it shot up all the way to 2,700. That's the kind of move that we've seen on this one. But on that note, we do have to wind down on this show. Vijay as well as Kush, thank you very much for joining us and helping our viewers with all of their individual stock queries. For all of our viewers, remember, you can email us your queries and we will keep taking them up with our experts. And with that, we wind down on this edition of Your Stocks. You guys stay tuned. Closing bell is up next for the last hour of trade.